Jamie, I've been in the logistics space, the technology space for a long time. And last 30 years, I've been hearing about an inefficient network, empty miles when it comes to trucking. The driver attrition, especially in the long haul space in the US, has been above 100% on an average, which is an insane number. So as long as I can remember, when I got introduced to logistics, started working on transportation planning, transportation management applications, we kept thinking about the solutions. The big change came when I went to work for a company called GT Nexus, and we started doing multi-enterprise collaboration for global supply chains. That was the key, where when you are trying to build a more efficient network, and that has been the mission for SemiCab from the beginning, is build a more efficient network where the resources, the entities that you are scheduling, that you are using, get utilized really, really well. But then also the drivers in there get to come home on a more predictable basis. And that is the biggest cause of attrition there. So doing those two things together, the solution kind of formed up in terms of everybody talked about collaboration, everybody talked about optimization, but it had to be done. Both those things had to be done differently than we think about in a traditional sense. So jumping off from GT Nexus back into the startup space, that was the whole purpose for SemiCab, where we wanted to come in and solve this problem very, very directly. In Nexus, we were literally moving goods across the globe. You go from, let's say, inland China to get to the port, do the ocean, do the air segment, and then bring it inland into the US. So it was a more multimodal setup. Was not focused on optimizing the resources per se, was more focused on providing the best way for an enterprise, but then for that enterprise, connecting it to as many suppliers and as many providers, as many logistic services providers in a single ecosystem. In SemiCab, that transaction approach doesn't work, right? It's like the digital freight brokers try to do, where they try to bring in a load, is what we call it. A truck has to move from point A to point B, and you say, I'm going to put you in touch with a carrier. It doesn't really impact the efficiency, because if you end up in point B, you still have to, at some point, get back to point A. So the approach we took was same concept of multi-enterprise collaboration, but then orchestrating that collaboration in a dynamic manner across these enterprises on a day-to-day basis in an operational environment. And you have to go to a very different level of granularity when it comes to the time where these trucks can stop, because you are actually dealing with drivers who have to take breaks regularly, who have to drive safely on these roads. These are big rigs. You don't really want to compromise on the safety issues. The approach we have taken, there have been a lot of tech-only approaches when it comes to creating collaboration opportunities between different entities. We took a tech-enabled services approach just to make sure that all the entities' interests are protected. There is a neutral platform. But then the big technology innovation that we brought out was what we call predictive optimization. And the concept there is that all these companies plan for a day or two when it comes to transportation. Trucks have to be on the road for weeks at a time. Now, you have to be able to bridge that gap in terms of time, but then you also have to optimize at a scale that had never been done before. So we tested our technology on 500,000 loads a week with trucks that could start in thousands of different locations, trying to figure out which trucks should be handling it on a more consistent basis, week in and week out. So the technology innovation was there, and then the business model innovation was where we wanted to keep the experience the same for the enterprise shippers. But then on the carrier side of it, these guys go through boom and bust and go out of business very frequently, just like they are doing today. We wanted to convert that whole license to SaaS kind of structure So bring these guys in as dedicated to the ecosystem, so the capacity becomes very stable. And in turn, it becomes so much more reliable for the enterprise shippers because that capacity is not going anywhere, whether the capacity is tight or relaxed. So those were the couple of business model combined with technology that we brought to market that we are still the only ones doing it. Like I said, we tested it at a very crazy scale, then introduced the solution to the market in beginning of 2021. Grew quite a bit from 21 to 22 within the US. US is the first market that we introduced it into. And in 2022, in the third quarter is when we got picked to build what is being called the National Digital Freight Exchange in India. The community was your fast-moving consumer goods and consumer durables companies, all the recognized names that multinationals as well as large Indian entities. So we've been working on expanding into India, have introduced the solution there operationally earlier this year and have been growing there substantially with a very, very large latent demand that we are trying to capture. Strategic decision there was in terms of the customer buy-in to the SemiCab model and the SemiCab approach at a level that we had not even seen in the US. So this was a group of companies. Initially, it was 20 companies in the fast-moving consumer goods and consumer durable space that had basically decided, had looked at our solution, compared it with everything else out there for about 9 months, and said, this is the approach that can actually make us successful because we have a neutral platform, we can come into it. And if you have the right technology, there are so much efficiency gains to be had. Now, that was a big part of it on who was buying it. All the highest level supply chain leaders from these companies were involved. They had already created a steering committee to make sure the project stays on track. The members have a certain set of rules that they have to follow. And then you had, the numbers are obviously big. So you have 1.4 billion consumers. So when you deal with the consumer goods sector in India, you are solving a big, large problem, as well as the efficiency is at a lower level right now. So there is so much more room to improve the operations there. The commitment from all sides, including the government there, is crazy in terms of bringing down the logistics cost from somewhere around 14% to 9%. And transportation is a big, huge chunk of that. We're doing well in the US. In India, the growth in terms of the first set of customers that we brought on at the beginning of the year was names like P&G, Kellogg's, Kimberly-Clark, Mondelez, where you have Oreos and Cadbury, good names to have. Asian Paints, which is one of the largest consumer goods companies, the largest paint manufacturer in India. They're already in. We have Johnson & Johnson, Reckitt Benckiser, PepsiCo, Unilever, all these guys getting onboarded right now. And then we have a long list of about 15 to 20 other companies that are in active discussions. We are just trying to make sure that we bring on these companies in a disciplined manner, grow in a disciplined manner, the lanes, the geographies that we are handling in India. 30 full-time people right now, Perry. And then there are a number of contractors that we use. So the way we have structured the organization is we have a centralized technology team, and the way we build technology, it transfers geographies very, very easily. So getting it from the US, operationalizing it in India. Yes, there are India-specific things that we had to do, but the foundational part of the platform slid into India without creating any issues at all. So the technology team is centralized, and then we create these geography-specific teams from a sales and marketing, account management, and carrier relations, operations perspective. So that is the structure we are keeping. And then ops support, especially for the US, we are providing out of Philippines with a contracted team of about 6 people. The whole team comes with a very strong background in supply chain and logistics technology. A number of us came from GT Nexus, so the concept of multi-enterprise, concept of collaboration was ingrained in us, both in terms of building the platform, but also in how we approach everything. So Vivek Sehgal, who has worked at Manhattan Associates, Home Depot, GE, had left GT Nexus to go to Google, came back, joined us and handles all our platform, product, and technology side of it. Extremely diligent, extremely detailed supply chain guy that's written a couple of books on supply chain. Then we have KS Sudhir, who runs our India operation on the technology side. Literally started the India operations for companies like Apple and Cisco and Autodesk, took GT Nexus from 15 people to about 500 people operation in India, managing that. Very lucky to have him. And then we have Pankaj Sinha, who we have just brought on to run the India operations, comes from IBM with like a 30-year background there, basically taking innovative solutions to market, the leading edge part to market for IBM over the last 28, 29 years. We raised about 6 million till now. Primary decision was we wanted to have a lot of professionals as a sounding board for us, because we are trying to get into the space, technology people running operations. So people who have invested in SemiCab, they're your technology professionals, your marketing professionals, supply chain guys. So that's the individuals who have invested in SemiCab. And it has been a good experience because they contribute more than just the money. They are a very, very good resource that we can tap as we go. Did 4 million in 21, 10 million in 22. This year, we are thinking it'll be flat just because we are trying to expand into a new geography. We are trying to obviously conserve cash. It's a tough market. After the fund injection is where we are going to capitalize on all the demand that we have generated. And we are expecting that we'll hit somewhere around 45 to 50 million in the 12 months preceding the funds injection. Big, huge inefficiency is the source of not just the margin for us, but making the whole business model work. So think about it like this, where a truck today, if it runs 100 miles, 70 of them are loaded. That's the revenue generating miles. 30 of them are empty. So they spend money driving those miles, but they don't make any money on those. The whole approach that we have taken is we're trying to take that 70 to 90. So that 20%, which is literally 30% additional capacity that you inject into the system, that is the revenue. We use it, a part of it, to lower the cost for the enterprise. So the enterprise is buying below market from us, completely hooked in. The carrier gets consistent revenue from us, but we want them to make more than what they do today. If they're operating at a 3% margin, when we give them 6%, that's doubling their margin. And that still leaves enough in the middle for us where we try to operate at about a 15% margin on the freight revenue that is coming in. We have a lot of intellectual property. We have basically till now gone for know-how protection, just because when you do the patent filing, the cost is one part of it, but then you also have to share a lot of detail. And we wanted to go in with doing the know-how protection, keeping the technology, keeping our approach. There are so many layers to how we have built it. There's so much innovation that has gone into being able to solve a problem that may be thousands of times exponentially larger than any other problem that's getting solved in transportation planning today. I think the big, huge piece that we are trying to do, capitalize ourselves so we are able to grow to our potential. We believe that we can get to somewhere between $1 billion to $2 billion in freight across US and India within the next 5 years. The other big, huge opportunity that we have is moving into other geographies. And we are already having these conversations, starting with the customer again, where companies like Kellogg's and Mondelez, they manage the logistics for, let's say, Asia and Pacific, Middle East, Africa, from their Indian entity. The Indian entities who already are working with us have already volunteered whenever we want to expand into new geographies that they would actually take us there. The additional revenue opportunities that we get, where we have a large multimodal opportunity in India on the logistics side, where these guys, the government is working on dedicated freight corridors, rail-centric, with linkages. We have the community there already asking us to build a solution to capitalize on that. So that could be equal in size to the trucking part of it. And then we get into our whole quick pay, fintech, insurance tech, all the parking, all the partner ecosystem that comes into play and starts generating revenue for us as well. So lots and lots of opportunities there. We always talked about two basic plans there. One is we are a mission-driven organization. So our mission is we are building a more efficient network. And to build a more efficient network, scale is key, right? So we've always thought about if there is a strategic partner that we can bring in and we say, okay, we get access to 10 billion in freight by combining hands with somebody. Obviously, we are open to that. But organically, if we keep growing with some additions in here, I think there is a very clear path to IPO as well. I think the challenges are freight and logistics is always a challenging space. We do think about the economy is so connected globally. At the same time, the problem that we are solving is domestic in nature because it is for a particular geography that is defined by, it's not going across the oceans. It's not crossing those boundaries. So in India right now, we have this issue that we have so much demand, hundreds of millions of dollars in demand. We want to make sure that we are bringing in the right kind of supply. Scaling that supply is going to be a big challenge for the next 12 to 18 months. On the US side right now, the market is extremely soft. Lots and lots of capacity. The transactional nature of the business basically comes up during this time from the enterprise side. The carriers are going out of business. They want to do everything possible to stay in business. But the general market conditions are tough out here in terms of growing at a fast pace in the next 6 months or so. After that, again, the US is a much larger market than pretty much any market out there, and it will create a lot of opportunity for SemiCab. We're looking to raise about $10 million in this round to make sure that we are capitalizing the company properly to take on the growth that we are doing. The basic pieces that go in there, one, we are making sure that the technology team is scaled to handle the additional volumes, the additional business, the moving into other geographies, creating the multimodal solution. And then we have setting up the operations teams, scaling those as we grow. The good news is in India, we are seeing the operational costs as much lower than what we had projected. So some of the projections that we may have already shared, we are actually coming in quite a bit lower than that. So there's a very good margin to EBITDA conversion there that we are seeing. The rest of it, from a sales and marketing perspective, I think the investment will be in the US market on the sales and marketing side. Marketing focus in India will be more around, again, the supply part of it, just scaling that, bringing in the right transportation partners out there. And then as we go into other geographies, we want to make sure that we create enough cash flow on that side. Yeah, no, we've been on the front end of that in a couple of different ways. So obviously, when we talk about predictive optimization, there is the new age mathematical optimization working directly with machine learning. But then anything that we do at scale, and that's where the platform underneath is has so much AI in it just to make sure that not a whole lot of humans are touching anything. The transaction is flowing end to end. We don't have brokers on this end looking for demand. We don't have people trying to find a truck to handle this load. We want to focus on those unit economics, but then as the transaction is flowing through, there's a lot of documents in there that are coming in that are automatically getting read, translated, populating the databases, working through the stuff, all the invoicing that happens. We basically used a whole lot of AI in the back end to automate that entire process. So in India, the contract market only handles less than 50% of the volume. We are trying to take it to where 99% of the freight is getting handled through this model on the geographies that we take on. A big, huge step up from where the market is right now. So truly transformational in that sense, with both the approach and, of course, the technology that is enabling it.